Alright, so I'll be doing the weekly review of July 29th to August 2nd. So let's get right into it. So I started the week with a bearish bias, but it was key to know that the monthly candle opens on Thursday, okay? And this was key for profiling this week. And this is one of the reasons why I didn't expect a Tuesday high a week, okay? Now, another reason that you guys could expect this displacement lower was this, okay? If you use the same context that you did on a daily time frame and do it on a monthly, right? This candle manipulated this high, so this candle should at least go to this low, right? So now that this objective is met, okay, I want to see if we can get displacement below this low towards this low. Okay, we will see with price action, but this low right here was my objective for the week. Okay, so now that we have that, let's look into the weekly profile, right? Because we first start off, I have a bearish weekly bias. And again, this week closed below this week, so I can anticipate this week to go lower. Okay, so I have my bias. Now my profile. Monday did not have any news. Okay, along with we were inside of this range half the week. Okay, so what happens when we take one side of a range? There's a high probability of us reaching the other side. Okay, and I'll talk about this in a second, but I'm going to go day by day here. So we had SMT at these highs with ES right here, and Monday was a short. Okay, you could have anticipated this by anticipating a swing point to form in the AM session. Once you see, right, this SMT hold, let me go down to a 5. We have the SMT and we break through a low that took a high. Okay, this low sponsored this turtle soup and we broke through it. Then we have a soup for bearishness. Okay, so that's what I saw Monday. I originally was bullish on Monday because I wanted to see this high be taken, but ES took it, and I stopped my day there. Tuesday, you can anticipate lower again because what happened on Monday, right? Weekly profile is dependent on what happens the previous day. Monday, SMT is a high and breaks through the low that took the high right here. As well as market profiling, we are rejecting highs. Okay, rejection, displacement, rejection, displacement. Okay, so you can anticipate for Tuesday to run out this low because of what Monday did. Now, I didn't trust Monday high for the weekly range because Monday with no news is an unlikely high of week candidate. Okay, I attempted to long Asia this day, but I never got an opportunity. We just pumped. So I want you guys to see, right? Once this range is fully purged, this high isn't fully trusted because it's a Monday no news and the monthly open starts on a Thursday. Once we flip the high that took the low, we're now bullish, right? Once this high that sponsored this turtle soup gets flipped, we're bullish to the high. Okay, Wednesday was a classic buy day, right? Tuesday sweeps Monday's range. Wednesday classic expansion. Okay, very clean week. Now, a lot of people got faked out with this move up. Wednesday's move up here was a fake market structure shift. Okay, this was a fake move higher for a dump lower. Now let me tell you why. On a 1 hour, this is bullish price action. Okay, but a low time frame is only bullish until it meets a higher time frame key level, or a low time frame is only bearish until it meets a higher time frame key level, right? As this hourly has bullish price action, this daily has bearish, right? We are continually rejecting highs, breaking lows, rejecting highs, breaking lows, breaking through lows, right? So this is where time frame alignment comes in alignment. Okay, on an hourly, we're bullish, but that comes secondary to a higher time frame, right? What I had marked for Thursday short, although I wasn't trading in the AM, was this previous low. Okay, now I marked this low for a couple of reasons. Number one, it's a breaker. We souped this high, right, which makes this lowest down close candle a breaker. Okay, so this is my high time frame key level. And again, higher time frame key level has more precedence than a lower time frame trend. A lower time frame trend can be a higher time frame retracement, right? Everything is stemmed off of a higher time frame than what you're looking at. So I had this key level marked, one, because it's a breaker, two, because this is the last area in price that is balanced, right? I'll get into more talking to you guys about efficient delivery, but price likes to paint roll. Okay, if we have, let's say, a soup like this on this displacement leg, from here up is all efficiently traded, right? Because we could have buy side delivery and sell side delivery. The retracement will seek inefficient delivery here, right? Because this is only sell side delivery, right? And price likes to be efficient. You can see the same thing over here, right? This is all a balanced delivery. Sell side, buy side, sell side, buy side, sell side, then only sell side, right? That's another reason that this low is used for a weekly range reversal, because above this low is balanced. We have balanced price range in here. So price does not need to trade back up into here. Okay. So once Wednesday met its dole, a previous low, to then efficiently balance this, we created a range, right? Understanding, right? We're not displacing through this. Once we hit it, we start to range. Okay. Then at a key time on Thursday, right? Also a day that can cap the weekly range. Okay, Wednesday expansion, overnight range. Thursday soup, right? ES had a soup and Q had a failure swing. And we can see that it happened at a key time. Okay, 9:45, 9 a.m. candle. This is a perfect short. Reason being is what I outlined, right? Premium key level in a bearish market. Day of week, high probability reversal, Thursday. SMT, soup, at a key time, 9 a.m. And if you notice, 9 closed within 8. So 10 o'clock can be a distribution, right? This is why every PD array in the 10 o'clock candle worked, because it's a distribution candle on the hourly time frame. Okay. Same can be said with the 4 hour. I believe the 12 hour is very clean as well. Yep. So that's how I anticipated Thursday, although I wasn't able to trade it. I wasn't set for this Wednesday, right? Because again, the low time frame does not have a precedence over the high time frame. Okay. So once Thursday displaced lower, I had an obvious dole, a swing low, right? Which is the last thing we target. You always target failure swings first, and turtle soup second. The swing low was my target for Friday. If we dig into Friday's price action, NFP did not manipulate much and almost just went straight to the draw. Now, the reason I traded Friday was because of this, right? some of you guys may know about this. If not, I can teach you guys that real quick. A KOD model, okay? A KOD model is when price comes close to liquidity or drawn liquidity, and then starts retracing. Okay, when I see this, I need to look at an old high to be taken, right? A lot of the times, if this is your liquidity pool, price will expand towards it. The rejection block of this low will create a retracement. Let me draw that better, my bad. Okay, we have like a high put in here. The rejection block will create a retracement for us to soup and then hit the draw liquidity, right? This is what KOD is, the kiss of death. It gets close to it, has a retracement to a liquidity pool for a soup, and then expansion towards the draw. So this is what I was watching for on Friday on an hourly in a 15-minute. So right when NFP dropped and we didn't take this low, I instantly look at this high. Now, we did not end up taking this high. We did on MNQ, but the contract I was trading did not take it. So what I did was I waited for me to trust this high. I waited for bullish key levels to get ran. Okay, this FEG got ran. This order block did not show any resistance for higher. Okay, and I entered on a 5-minute open high. Okay, right here. So as soon as this candle got above this candle, I was in. Okay. Again, for what we framed, right? This is not an A+ model because I would like this to be taken, but equal highs will be engineered for later liquidity runs. So once I can confirm order flow is bearish by us displacing through lows, failing to hold bullish breakers, right? Breaking below them. I know order flow has changed and you can short, okay? This is the same thing. If you use that same narrative on an hourly for this, right? Once PD arrays start failing, once 4-hour FEGs start failing, once breakers start failing, you can anticipate continuation lower and that the trend is truly switched. Okay. I hope that was insightful. Again, just to kind of reiterate, this is a perfect model. Okay, perfect model. Weekly range. If you guys look at the templates I put in the Discord, it's the first half of the week range, Wednesday expansion, Thursday reversal, Friday cap the week. Okay. I expected again this because Thursday was a monthly open. Thursday is a distribution candle, and it's not random that Thursday was the big sell-off, right? First day of the month. So yeah, I hope this helped you guys. I will upload it to YouTube as soon as I can, and yeah, catch you guys later.